What's up, guys? Welcome to 12 a.m. Hustle. I'm going to break down to you guys what is futures trading and how to trade them on this video, okay? If you're first time to my channel, make sure you guys subscribe, like, all that good stuff. I got some more context on my channel. I'll be bringing out some more stuff. Basically, my channel is all about trading. I come from small caps, big caps. I've traded that. Now I'm in the futures game. So I'm going to go over that with you guys, okay? So I'm going to skip all the fluff. I pretty much did 6 slides, and I'll show you guys examples on the trading charts, and I just want to go over basically the stuff that I think you need to know when you're first beginning to trade futures and what the most important thing is that will affect your trading. So we'll start off with what are futures, right? The forward and the futures contracts are financial instruments that allow market participants to offset or assume the risk of a price change of an asset over time. A futures contract is distinct from a forward contract in 2 important ways. First, a futures contract is a legal binding agreement to buy or sell a standardized asset on a specific date or during a specific month. Second, this transaction is facilitated through a futures exchange. By the way, the exchange for futures is CME. Okay, you can always go to www.cme.com. You can look up all the information. Now, what this basically means in simple English is, for example, if you ever traded a stock, if you ever bought Apple, Amazon, Nvidia, when you buy the stock, you buy it at that price. Nvidia's at 115, you buy it at 116. That is the price you get. Futures, you're basically buying in the future. For example, if you buy 100 hogs, correct? 100 lot of hogs, and it's dated for 12/5 of 2025, and that date comes and you haven't sold that, they will send 100 hogs to your house, and you're stuck with 100 hogs because you got the contract. So now you're liable to get that. Same thing with oil. Buy 100 barrels of oil, 100 lots of oil. Now you get 100 barrels of oil. You're stuck with the oil. Now you got to figure out what to do with it, right? That's basically what the futures market is. And futures, they have everything: gold, S&P, NQ, oil. They even have crypto in the game now. Micro, they have it all, right? Cotton, coffee, by the way, orange. So all different stuff you guys can trade. Next thing that I think it's important for you guys to know is futures expiration and settlement. Future expirations date, they mark the end of the contract's life cycle, typically on the third Friday of the expiration month. Basically, what it's saying is they roll over every 3 months. You have rollover, it's when a trader moves his position from the front month contracts to another contract future in the future. It does impact trading, can cause increased volatility in liquidity changes near expiration, affecting market positions, meaning you'll have big gaps. And I'm actually going to show you guys right now so you guys know what I'm talking about. So when you don't roll over, you're going to end up with big, huge gaps in the chart. So look at this. Here is, I have MNQ, and we had rollover this past week, right? Here's your rollover date. This is on TradingView, by the way. If you have TradingView, different brokers use them. Right here, I'll say contract switch. You're switching over from March over to June. As soon as I click June, here's the difference, right? I'm going to show you guys this. So here it is. This is the trade I had today. But here is the gap, right? So you have to have this. You have to switch over, or you're going to be stuck. You're going to have gaps in between your charts, right? And you don't want that, okay? So just so you know. And then if you want to type it in, here you go, MNQ, and then you'll go to indices. Oh, you could just go all. It should just come up. It'll give you this one. There you go. See? Boom. And that is what it is. And you can always look at the bottom on TradingView. So let's go back to this. So now you guys know what rollover. It is important. It leaves gaps up on the charts. Next thing I think you guys should know, which I think is very important, is your point movements. Here's your point movement breakdown. I'll show you what it means on the charts in a minute. So you basically have, the biggest difference is S&P minis and micros. Minis are big boy size. When they move points, they move big. So the S&P moves $12.50. The NQ moves $20. That's huge. And crude oil, $1,000, right? A point. Then you have gold, $100. These are minis. If you move over to the micros, which is what I trade, you have the S&P, which moves at basically $5. MNQ that moves at $5. Crude oil, $10, and then you have your gold at $10, right? So you must be asking, how does that make sense, or what does that mean, right? If you're new to the game. So I will show you guys on this. Basically, I'll do a little back test. Let's say we're going here. We're going to buy one MNQ, which is one lot, which is one micro. You're going to have a tight stop, right? Type stop, bottom of structure, and we get into it, right? Boom, 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 boom. We're looking for a weekly break. We'll see if we get the top. Up, there it is. You flatten it out, right? And boom. That's one micro, right? That's the risk. You made, I think, 110 bucks. Now I'm going to show you guys the difference between micros and minis. So you have mini. Here's your mini. Here's the big difference, which is why I tell people to be careful and trade micros when they first start out. Even when you've been in the game, it's just easier to control risk, and risk is the name of the game. Let's say you short this, right? One mini, and your stop is going to be the top of that structure, right? And you're looking for a fall into VWAP, right? Let's just say that's your trade. You are stopped out instantly for how much? For $700, $755 basically, $700 with commissions. So it is a big difference between micros and minis. Okay, so just be aware of that when you start your trading journey in the futures. So we'll go back to this. The next one I think is very important is your margins. I use Ninja Trader. Ninja Trader's great broker. I have a video actually. I'll link it at the bottom. I'll link it here. You guys can check it out. It's great. I break it down more. You have the intraday margins. These are your intraday margins. You have $50 base. Intraday means at the end of the day, you do have to liquidate all of your positions in these products here, or the intraday goes up. It's not the same. So it's $50 for intraday. And I believe if you do news, it's $500. So that's a big difference. And then if you hold overnight, it's like $1,000. So big difference on account size. So basically $50, $50, $50, $50. So let's say you can start, a big thing I like about the futures is you can start with a small account, $2,000, $3,000. And it does not have the PDT rule. That's another big thing about futures is you don't need $25,000 to trade like you do in stocks, right? So I'll show you guys here. Big difference. Let's see. So let's say you want to trade, let's say NVIDIA, right? So you want to trade NVIDIA. What's NVIDIA? I think NVIDIA's at 120 today, right? 120, and you want to trade the bad boy. So you're here. You're going to need, one stock isn't going to make you nothing. You're going to need like 100 shares, right? Let's say 100 shares. You need 100 shares. You're going to go ahead and buy this. And then if you, basically you're going to be needing a lot more capital. You'll need about, I'd say $40,000 to go ahead and make it actually difference, make some money. Because with 100 shares, you're not going to make nothing. So there you go. You're looking at that, looking for a long. You made $90 off 100 shares, right? But the capital that you need to have those 100 shares to trade, day trade, is 10 times more than the futures game, right? You can make that with one micro, right, on MNQ. So that's the biggest thing on here. I wanted to go ahead and break that down to you guys. This is pretty much what you need to know for trading in the game, trading futures. Now, also want to go down with how I trade. I have another video also, which I trade basically a pre-day high, pre-day low. This is today's trade. Let's say you wanted to trade the breakout out of the London. You would have traded right over here. I just want to show you guys this real quick. Let's say we opened at 6 by 650. You would have known that we kept holding London. We kept above Asia. We kept about, MO means midnight opening range. You would have just longed it, right? Quick little scalp off here, off the breakout. And your pretty much stop would have been the stop of that structure right over there, right? Would have been like $125. And you would have been shooting for either a 1-to-1 or a 1-to-2, right? Kind of like that. That would have been your shot. Now, obviously, we had this side watch. Another thing I tell traders is if you're trading this and it's already like 10 o'clock, you could just close it out. You could put a in profit. There's your in profit. You get stopped out. You made like 26 bucks. Now that's just micros. When you start off, just start off small. That's my biggest tip for you guys. So yeah, that is introduction into futures trading. I'll be dropping more videos for you guys later. I just wanted to get the most important things out to you that I think most traders need to know. And that's it. Thank you for watching. Make sure you guys stay connected, subscribe to my channel. Feel free to reach out to me, questions, anything you guys want to know. I hope this was simple enough for you guys just to get the gist of what is the futures trading, what is futures, and how to get into it, and basically how to start, right? I'll be dropping more videos for you guys later. Thanks for watching, guys. Peace.